Hello, Namaste. This is 𝗦𝗛𝗔 here once again and welcome back to my channel 𝗦𝗛𝗔 Stock Analyst. So first of all, I apologize for making a video after a long time because I was on holidays, come business, come social tour in India, and I just came back from India. So in today's video, I would just discuss something regarding the predictions. What is the latest which I think for the second half of this 2023? What are my predictions for the stock market? So let's start without much delay. So first of all, as everybody knows in the world, India is buying maximum amount of crude oil from Russia. And Russia is giving a super discount to India. So, if you look at this, if you just calculate, which I have done a back of the end calculation, because India gets around 20% of the discount, which is not in the public domain or anywhere, because there are a lot of this international geopolitical pressures and tensions, all this cross rivalry and this thing plays out. So nobody knows the exact discount, but what with the back of hand calculation, I have calculated that it's around 20% of the discount which India gets. And if you calculate this into the kind of amount every day India buys from Russian oil on an average, it equals our defense budget. It's around $70 to $80 billion in a year. India is saving that much money just by buying Russian oil. So Russia, in a way, it provides not only cushion to India, India's defense has become free because that much saving, and that saving is only going, so you are not spending any extra. So that it's a double booster for the India's economy. So first of all, India is saving on the import bill because most of this oil is now being bought in not in dollar, so it's in rupee or in dirham or some other cross currencies, but not in dollar. So that way also on the currency exchange itself, India saves a lot of money, huge amount of money. So that way, if you look at right now, why with the oil prices, India's currency, exchange rate, rupee, INR against USD doesn't move much because of the oil. If the oil price goes up, it doesn't depreciate, or if the oil price comes down also, it doesn't depreciate much. It remains in a stable because of this particular one super aspect about buying this Russian oil and Russia providing huge discount. So that way India is saving on the exchange rate also, and that is also being you can see on the stock market, because if this currency is remaining in a stable zone, 5% plus minus, that solves a lot of problems. That is the reason a lot of money is being flown in India. This FI, foreign investors' money is coming. So the first prediction is that as long as this Russia-Ukraine war conflict continues, Indian economy will be on a roll. India will rock and roll. So even though I should not say, because war is bad for the whole world, it's not good as such, so much of destruction and people's death. It's war never is, but it's always, there are two aspects to any of the bad things. There are some bad things which is positive for few people and which is negative for few people. So war also is like that, which is profitable for few people and it's loss for few people. So in this, India is indirectly winning by diverting away from the USD, by saving on the precious foreign exchange, by transacting business with Russia in other than the US dollar, and getting super discounted. That is boosting India's economy also. That is one of the major reasons which nobody is talking about. And I thought that I would just explain this. So that way India's economy will continue to rock and roll as long as this war continues. So that is one. So stock market will continue to do well as long as this Russia-Ukraine conflict goes, Indian stock market. Now, coming back to the sectors. So if you look at metals and mining, that I don't think so that will be a very positive for this, for as long as the war continues. So there are other aspects also. The main reason is that China is the biggest consumer and producer of most of these metal commodities. Okay, so more than 50% of whether it's iron ore or steel or aluminium, copper, this is all consumed by China in the world. So slowdown in China. Now there is another story. Let us just a little bit, I will digress into this China story so as to explain that what is the factor behind this. So 𝗦𝗫𝗀𝗃, this China is not doing well at all. You know, whatever they may project or the world may project about China, but they are rolling down, falling down much faster than the people's estimation or market's estimation and expectations. So that is the kind of in China, the economy and all the situation is very bad. So you can see in terms of all this posturing of China against Taiwan, but China is you know, most of the people they just go by the economic size of China and the country size of China, and they say that, oh, it's a militarily, but militarily China is not at all a strong country, and even if most of their military weapons, they are not of that, it may show like this way that latest technology in the world and all these things, but they are on the ground performance, it's very bad. It's not going to be. So that is my understanding or estimation, what you can say. And that is one of the reasons they never go into the conflict with on Taiwan with USA or any major. And with India also, I don't think so they will go into conflict. It is the contrary, India may go into conflict with China and win over also, because militarily China is just a big paper tiger. And economy is doing badly, and that is one of the reasons also that recently China cancelled that so-called very much expected power of Siberia, the gas pipeline which was going from Siberian region of Russia to China. So that project was expected, everybody, you know, Russia was expecting that this will go through, and suddenly in the last moment recently it came that they have cancelled that project, so they are not going to. So there are two aspects to this. One aspect is that either China is very much afraid of USA and of Western, you know, because most of its economy ties are connected with the USA and the Western countries. So it's under pressure not to go for this and with anything with Russia directly on a big project level, significant bigger project. And the second aspect can be that China's economy is much in worse condition than what is being projected to the world, or what we all see. And that is why the demand may not be there. They may have estimated some kind of, you know, this minimum requirement of the project. So that much demand may not be there. So instead of that, the China has, I don't know whether many people outside Russia and China know, but they have kind of declared an agreement, or they are going to go for buying gas from Turkmenistan. Okay, so that may be on a spot basis and all these things, not a committed volume, which may not be the case. What was with Russia, if you proper pipeline, then you have to buy that much of. So maybe that economy is not so well and robust that they don't expect or they don't predict that much of demand in the future. So that is one of the aspects to look into. So as long as the China is in bad shape, we are talking about this year only, right? The balance of predictions about 2023. So this year I don't think so that metals and mining is also, so stay away from those, you know, that because China, till the China recovers, nothing is going to happen in metals mining space. And energy space also, you know, Saudi Arabia and OPEC may go for some cut and all these things, but that can only temporarily boost the sentiments and the price of crude oil. But again, as long as the China's economic story is not coming back to the, at least on a certain level, we are not going to see that much of price movement in the crude oil also and demand also. So as far as the Indian stock market is concerned, it is primarily driven by this Russian cheap oil, which is boosting the economy, which is squeezing down the inflation is coming down, and because of that even domestic consumption is becoming kind of a robust. I mean, I would not say, but the domestic consumption is also continuing to remain on a strong level. So that's why the domestic consumption story, stocks like, maybe say financial stocks, because huge requirement of finance, so many of people are still without home, so that home finance requirement and those kind of sectors, domestic consumption, FMCG sectors, food, agricultural sectors, that may be doing particularly reasonably. But again, coming back to this valuation, it's not at all very comfortable about India's stock market valuation. So you may see some kind of a, the market may not come down, but I don't see much scope also for going for this rest of the year for the market, except for that my prediction is that the market will remain good, or India's economy will continue to do well as the market will continue to do well as long as this Russia-Ukraine war goes. So these are the sectors, except for the metals and mining and commodities, which are China specific, like metal commodities, you will see some kind of a positive sentiments in the domestic consumption. What do you call that? Even the financial sector, churning may happen, and if monsoon holds up nicely in India, then in agricultural fertilizer sector also you may see that momentum coming into the stocks. So these are, I just wanted to discuss my latest predictions about that what is fueling India's economy, so, and prediction about the stock market. Before ending this video, I would just request all of you, if you have not yet subscribed, please subscribe. Please put a like if you like this video and share it with your friends. And also I have a Telegram channel where I come out with, every time I cannot make video, so you can find some of the short scripts, ideas also on day to day or as and when I feel like this way. And it's a Telegram channel, 𝗦𝗫𝗔 stock analyst. You can join, and it will be in the description box down below. My website is there, statanalyst.com, for any services, for consultation and all this thing, investment advisory. You can contact me. That's it from my side, and love you all, and ciao from 𝗦𝗫𝗔𝗛.